Hi everybody, it's Mike Martin. I'm here at the Milken Global Conference with my guest Anthony Scaramucci from Skybridge Capital. Nice to see you, Anthony.
Thanks, Michael, for having me.
Besides being a father, he is an author, a film consultant, an actor. He runs a fund of funds company, and he's also now a philanthropist. His second book is The Little Book of Hedge Funds, and it's out on Wiley. First book was Goodbye Gordon Gekko, great book. What's the misconception about hedge funds in the public side?
Well, well, first of all, most quote-unquote misconceptions are partially true, right? So there is a element of the hedge fund industry that looks egregious. There's an element of the hedge fund industry that's nefarious. Yeah. And so what happens is the American media or the global media perpetuates that, and so makes that the overarching feeling, the overarching image for the industry. So I don't want to say that some of it's not true. What the media does, they have to sell, and I don't blame them. I understand they have to get ratings and sell newspapers and so forth. They focus on the guys that made $1 billion,
yep,
and they focus on the guys that stole $1 billion.
Yeah.
And so, those things are true, and there's some egregious spending and there's some nefarious activity, but by and large, the large pack of the hedge fund community is doing very responsible things, very hardworking, trying to get lower volatility returns, Michael, doing better than the bond market, right, with less volatility than the stock market. And so, there's some great capital allocators like David Swetson, right, that will allocate into the industry because of that. And so I think the industry's been mislabeled, but there are bad journalists, there are bad doctors, there are bad scientists, bad professors. Unfortunately, there's no industry that we can look to and say, okay, there aren't a few rogues. It's just because this is high profile because of the money, yeah, the rogues seem to float to the top here.
And sooner or later, the cockroaches get smoked out, just like in any other industry, and the best people make the most money. They have the 4 and 50 structure, they have the 3 and 35 or whatever it is, right? I mean, that's really no different than any other industry. The best people make the most money.
Yeah. Yeah, I think that's true. I do think that there's a problem smoking out cockroaches in our industry because, listen, you can get away with things in the industry for a long period of time. Bernard Madoff, 30 plus years running a Ponzi scheme. The irony there, and I do address it in the book, he wasn't a hedge fund manager. Right. He was a separate accounts manager, but he's been lumped in with the hedge funds, right, because he got allocations from fund of funds. And so, I talk about that and how that has also mislabeled the industry. But the point there is he had 30 years in the industry where he was doing this activity. The regulators didn't catch him, the government didn't catch him, his investors didn't catch him, his bank didn't catch him. The recession caught him, right, or the steep global financial crisis.
That's right.
That smoked him out.
Explain to folks, and it's delineated in the book, but I'm giving Anthony a good layup here. What a fund of funds, right? A fund of funds compared to a hedge fund. What's the role of the fund of funds here?
Well, look, the best way I can say this is that we're an allocator of capital into the hedge fund space. So I often tell people, if we have a $50,000 minimum on one of our products, our registered product. So I tell people, look, you can't get access to these world's best money managers unless you come through a vehicle like ours. And so when I speak in public, I tell people that I want Skybridge to be part of the investment cloud. We know about cloud consulting and cloud computing, right, but I want us to be the application service provider for investors into the hedge fund space. So let's say you're worth $1 million, you want access to hedge funds, you don't want to put it all in one fund. You want to put 5 or 10% of your money into hedge funds or alternatives. Well, the best place to come is a place like Skybridge or one of our competitors, where we can act as your de facto chief investment officer for your hedge fund stuff. We can do the due diligence, we can do the risk management. There's a chapter in there on how to avoid the Bernard Madoffs. Yep. We describe how and why you can avoid them. And so we want to do all of that stuff for you, charge you a fee, which we think is very competitive. Right. All of our returns are net of fees. We've done quite well. And we're trying to send a accessible message to people. We don't want the hedge fund community to be just the snobby group of people where it's either super high net worth individuals, well-heeled institutions. We want people from all walks of life to have access to the product.
So you're a person who looks at hedge funds all day long. You mentioned this in the book, but I think it's one that comes up before, especially when you're looking at the fat cats. Is a hedge fund a compensation scheme, or is it a vehicle where the manager can actually bring value, what they call alpha, in the business?
This is a very, very big debate. This is the efficient market, lack of efficient market debate. This is, are hedge funds better than mutual funds? Are they better than the S&P 500? This is what makes a market.
Yeah.
You know, ultimately what happens is people are looking at things from different angles, different perspectives, and they have differences of opinion. Now, we can look over 200 years, and Jeremy Siegel will say to you that stocks are for the long run.
Yeah.
Nori El-Rabini will tell you, oh, that's not true, because stocks have underperformed the last...
Did the forward to the
20. Yeah, Nori did the forward. Stocks have underperformed for the last 25 years. So, you know, there's an expression that we both know. There are lies, there are damn lies, and then there are statistics, okay? And so we can make statistics look and shape and feel any way we want to make our argument. I'm just saying in the book that somebody that has common sense and somebody that's prudent should have their eggs in a number of different baskets.
Right.
I'm saying they should have a portfolio of stocks, a portfolio of bonds, and they should have it baked into their portfolio some alternatives. Now, we can say here, the naysayers, oh, it's just a fee structure, it's not an asset class. I'm on the other side of that. I believe it is an asset class, because what we're trying to do in the hedge fund industry is we're trying to get attribution or performance away from, that's non-correlated with the different sectors that you would typically invest in. So that's where the hedging comes in, or that's where the arbitrage relationships come in. And so when you factor that into the equation, it's really its own asset class, because it's designed, I don't care which manager you're looking at, unless he's a long biased guy and he's just slapping a hedge fund fee on his hedge fund, well, okay, I could cede to that. But most of these guys are using hedging strategies, they're using sophisticated derivative strategies, options, other types of investing. They have a perimeter that the typical mutual fund doesn't have, or the typical ETF. They can go long, they can go short, they can do capital structure arbitrage, where they're short the equity but long the debt to trap in that spread and create value that way. And so I believe it is actually an asset class.
So what's your capacity as a fund of funds manager? Where do you get kind of?
Well, we're going to be in our flagship fund, which is called Series G. We'll probably be constrained there in another $1 to $2 billion, maybe $3 billion at the outset, outstretch. But we're in the process of developing new products. We have an emerging markets fund that we're developing. We're developing a less concentrated version of Series G for institutional clients, and so look for Skybridge to try to innovate, create exciting products, not just stay stale in our current product portfolio. And I think through the process of creating differentiating products, we'll continue to attract capital to our business.
As I'm a teacher. I teach guys who have 3 years to 50 million under management, and they were using emerging talent to be like 500 million. But at 500 million, if you're even 1 in 10 or 1 in 20, you've kind of made it. Unless you're trying to be Caxton or Tudor Investments or whatever. What is your screening process like when you're looking for new managers, and how you incubate them? What are you looking for on their resume, so to speak?
Well, listen, it's a lot like baseball talent or any type of performance artistic talent. People can sing well, or they can hit a baseball, but there is an X factor that Simon Cowell talks about, where is the person going to chew through the wall to become successful? What we find in our industry, and in most industries, that all very good plans and very good resumes go by the wayside with contact with the enemy. If you'd said to me, okay, listen, you're going to start Skybridge in 2005, and then Lehman is going to go out of business in 2008, Bear is going to get bought by JP Morgan, Merrill Lynch going into Bank America, and then Skybridge is going to go from 0 assets to $6 billion in assets under management, I would have said, okay, that fortune, I got to go down the hall to the new fortune teller, because I never would have believed any of that. So what I'm looking for in people is, can they adapt? Can they survive? How passionate are they about their business? Are they going to fold when the heat gets turned on? Or are they going to stay in there okay, and fight for what their dreams are. That's where the talent is separated. You know, and I often find that people that have had very big jobs and very big organizations, super smart, super talented, but when you go to trying to figure out your own copy machine and your own technology, and you're in a much smaller group and you have less access to that firm's infrastructure or information or flow, well, boy, you know, the rubber meets the road in those situations. So we have to find people that can handle that sort of heat, that sort of pressure.
Mike Tyson said, everyone has a plan until they get punched in the face.
That's exactly right. but it's a great re-aphorism of the battle plans going by the wayside with contact with the enemy. And the truth of the matter is, I don't care who you are, in 2008, you were faced with a huge crisis if you were in our industry.
So let's talk about fighting the fight. Next week, you and I will be in Las Vegas for SALT Conference. You're going to have almost 2,000 people kind of converge. Anyone who is involved in CTA, hedge fund, fund-to-fund space is going to be in Las Vegas
Thank
at
God.
your event. Yeah, right?
Well, yeah, I'm thrilled that they're all coming, and it's turned out to be a great event for two reasons. The first one are the people that attended, because that obviously is what makes it a great event.
Right.
But it's also a tribute to the staff at Skybridge. You'd be amazed to find this out. We have 8 people working on that conference. And somebody from one of the big firms said to me, wow, we'd have 300 people working on this thing. And so we've got a great staff, a selfless staff at Skybridge that has done a great job of putting this together. I'm very proud to be a part of it with them. It got born from the vacuum that was in the conference space in Las Vegas in 2009. Right. Victor Oviedo, one of my partners, thought it'd be a good idea to try this thing. And it's now turned out to be a pretty interesting event. We're going to do this event in Singapore in October. So it'll have more of an Asian flavor, and we're inviting people to come experience Asia with us, which obviously arguably one of the fastest growing economies, fastest growing continents. We're going to do it in the Marina Bay Sands Hotel. Next week's is at the Bellagio. Right. Secretary Gates is coming, the retired defense secretary. Vice President Al Gore is coming. We have other headliners. I ran out of presidents. You know, we had Clinton and Bush and so forth. And so now we've moved over to rock and roll bands. Maroon 5 is going to be with us on Wednesday night to help us launch our strategic philanthropic mission. My staff originated an idea called Aspire Giving, which is a 501c3. We believe that the buzzword of the future or the next decade is aspiration, or an aspirational society, and we're trying to find charities that help people realize their aspirations. If it's a lift out of poverty, if it's clean water in Africa, if it's helping American troops come back to the United States and transition back into the United States, okay, after they've served their country and made enormous sacrifices. The people at Skybridge, in conjunction with Maroon 5, are raising dough.
The book of hedge funds. Good
Thank
seeing
you
you,
so
buddy.
much.
We'll
really
see you in
appreciate
Vegas.
the opportunity to be here. Thank you.
All right.